Yo, I originally was going to title this video "Why I'm Not Calculating My Net Worth and You Shouldn't Either," but that was kind of gloomy, so I came up with the name that was on the video when you clicked on it. Now, we're all familiar with what your net worth is. Your net worth is when you take all of your assets, what you have in your bank accounts, what you have in your investment accounts, the equity in your homes, the equity in your real estate. You take all of the positive financial assets you have, you subtract all the liabilities, and hopefully, if you're lucky, you'll have something that comes out in the positive. Now, we all know that net worth is something that's a generally good indicator of a person's overall financial health. I'll link the video to my closeout net worth video that I did last year, so y'all can see where your boy is at on his first generation millionaire journey. I'm not calculating it. What I thought better to focus on, first of all, I remember when my net worth was like negative hundreds of thousands of dollars because I was just a student, so I had no real assets. I had no real money stashed away. It was like a hole. I was like, man, I ain't gonna never get out of this hole. So the first time I looked at it, it was an eye opener. So that being said, I would advise, if you've never calculated your net worth, you shouldn't skip it. But for me, I'm not doing it. I'm going to focus on good news. What is the good news that's going to come out of a recession? Even though they haven't officially declared it as a recession yet, a recession is essentially 2 down quarters of economical growth, even though they haven't declared it yet. So let's talk about, what are some of the good things that's going to come from a down economy, from a potential recession? And we're going to talk about why it could be advantageous for you to just pass on calculating your net worth and wait to the end of the year, because that's what your boy gonna do. Let's get it. I'm Marcus, you're at the channel The Debt Free Dad, where we're talking finances, following my family's financial freedom journey as we talk about financial takes. As I give financial takes, we have guests every now and then, but we're also tracking my family's journey to first generation millionaire status as we're working on paying off our student loans. So we got a mixed bag of a little bit of everything. And sometimes if I want to talk about some random-ish, I just talk about some random-ish. So y'all bear with me. It is what it is. Now, let's talk about it. Why am I not going to look and calculate my net worth? When I first started doing my net worth, it was funny because my wife was real apprehensive, I don't know if we should put all that out there. So I kind of lollygagged around it until I thought about it. I was like, man, we ain't got nothing. It's people out there who got net worths that are in the multi-millions of dollars who putting their stuff out on YouTube. So I'm gonna go ahead and put mine out on YouTube and pray that, nobody come over here wanting that smoke. And if somebody do come over wanting that smoke, they're gonna get that smoke, because we are strong proponents of the Second Amendment. But it's really not that big of a deal. Plus, I think it's a good way to track the progress so people can see, how am I gonna have a millionaire journey if y'all don't know what the hell my net worth is? I'm gonna just wake up and be like, I'm a millionaire, I made it. And y'all gonna be like, wait, bruh, I don't see your progress. So that was the main reason why we just kind of jumped out there and started putting the net worth out there. So, we spun that net worth to something that was very positive, but I'm not going to look at it. And the main reason why I'm not going to look at it is because, for me, just kind of mentally, I already know what the market has been doing. I know that all of my investment accounts are down. Every investment account that I got, my 401k is down. My individual investment accounts are down. My Roth IRA is down. Everything is down for the year. I mentally do not want to even look at it because I'm not even worried about it. Now, I will tell you, if you've never calculated your net worth before, you can't skip something that you've never done. Like, man, I'm going to skip going to the gym and I've never been to the gym. Bro, you can't skip a gym day because you never had a gym day. So if you never calculated your net worth, you shouldn't skip doing it. You need to do it to just know where you are. But if you're somebody like me who tracks your net worth every quarter, maybe a couple of times a year, I think it's okay if you want to skip it, because right now I know all I'm going to get out of calculating my net worth is probably a little frustration and annoyance. So I'm not even going to look at it. I made up my mind I'm going to calculate it at the end of the year to find out what progress was made during the end of the calendar year. And, we might get lucky. Maybe the market will turn around. Maybe it won't. I can tell you right now, the only assets that I have that are yielding me a big turnaround, a big plus when it comes to my net worth, are my properties down in the South and my primary residence. Those are the things that are going up. Everything else is down, so it is what it is. I choose not to even deal with the annoyance of looking at it because I already know what it is. So your boy gonna take a pass on the net worth. Now let's talk about what's more important. What is the good thing? What is good coming from a bad economy? What's good come from a downturn market? What good could possibly come from a recession? Well, the last video, I put up some statistics. Shout out again to the Money Guy Show because they got some great material up there, some visualization so you can see it with your eyes. But I put up some metrics to show once we hit the bottom in the market, how fast the recovery turns around. So once you hit the bottom, in short, after 12 months, you essentially made back all of your losses plus some profits. But a good time when you're looking at market performance, sometimes we are so focused on looking at it in the short term. What did the market do today? What did the market do the past 30 days? What did the market do the past 90 days, the past 100 days? To get a good glimpse of the market, you got to take a 3,000 mile square foot view so you can get the entire picture. There are ancient ruins. When you're on the ground, you don't see anything. All you see is stones. But if you fly over them with a helicopter, you can see like, wow, those big ass stones I was standing by are actually in the shape of a snake or in the shape of a particular formation or in a line with the celestial alignment. But you can't see those things when you're on the ground looking at it because you're too close. You have to back up so you can get a bird's eye view. So right now we're going to back up, take a bird's eye view, look at the market and how it's bounced back from downturn, from a recession to a recovery, so you all can see over the long term that the market is made for people who are going to invest long term. This is a history of bear markets versus bull markets. So this is when the economy was down, the stock market hit a recession, and the main thing we're going to look at is the bounce back. Now, the interesting thing about this, if y'all take a look at the screen, this goes from 1957 all the way through current. So you can see what the downturn was in the market versus what the recovery was. And now, like I said, now that we zoom out and we're looking at it over a long period of time, you can see there are some things that just balance out about this chart. The first thing is, if you look at the bottom, all of the numbers in red that denote the loss in the market, the losses are never more than the bounce back in the market. As you can see, that first year, 86% return. The next recession recovery, 80%. The next one, 47%. Look at that. 582% from 1987 to 1997 was the overall return on the market. Let's go take a look at 2008. In 2008, the market was down 57%. From 2009 to about 2017, you had a 401% return in the stock market. So looking at this chart should give you some cause to pause, because the first thing you notice is that the bad times never last as long as the good times, and the returns during the good time, during the bull market run, significantly are greater than the losses during the bear market run. I just want to do this real quick video so you can know that you have to zoom out. Sometimes when we look at things too close, when you're looking at the past 3 months, 6 months, 9 months, it just looks bad. But when you actually step back and take a look at the big picture, you're like, oh, it's not as bad as we think. What's the old saying? Right now, everybody who's watching this video, of all the BS and drama that you've been through in life, you've overcome 100% of it. I don't care if it was a bad relationship, a bad investment, a bad job. You've overcome 100% of the problems that you're encountered if you're still here today, if you're still watching this video. So there's no reason to think that you won't overcome a down market. That's just kind of how life works out. So with that being said, I'm not going to really focus on the short term. Me looking at my net worth and what it did the past 6 months is just too much of a short-term view. I'm going to just let it ride out. I'm going to not look at it because it's just going to annoy me because I already know what it is. And I'm comfortable because I know that I'm not accumulating any new debt. I'm saving, I'm investing even when the market is down, and I'm paying off the only debts that I have, student loan and a mortgage. So At the end of the day, I'm setting myself up for success no matter what the hell the market does. That's it. I hope y'all got some value from this video. Y'all make sure to share this video with a friend, like, comment, all that good stuff. Hey, I'm going to be going live this weekend. It's going to be an interesting topic. Y'all see the premiere ad up, so y'all make sure y'all check it out. Saturday at 8, going to have a special guest. We're going to get some finances, fun, talk some stuff for the culture. I'll talk to y'all later. Be blessed. Peace. Either, it's both the same thing though, right? It's just a difference in the enunciation.
Yeah, some people.
It's like
I like to use it in some sentences and some like
depending on what I'm saying. Yeah. Like if I'm a comparison of something like
I would
either this.
Like if you're like saying like if you're handing like if you're
Yeah.
I would say
either. Right. I use it in a comparison.
Yeah.
Right.
To, like when I'm talking to someone, that's when I use it.
I'm not calculating my net worth, and you shouldn't either.
Yeah.
I'm not calculating my net worth, and you shouldn't either.
The opposite of what I said.
Well, yeah. I ain't listening to this. I ain't listening to this kid either. either. I ain't listening to this dude. All right, that was it. When I said it, I was like, both of them are grammatically correct.
Yeah, it doesn't matter.
It's like coupon.
Yeah.
It's coupon, by the way, not coupon. There's no Q. It's coupon.
It's coupon.
You go cut out your coupons and put them in your coupon book. All right. Yeah, go ahead and close it.